What up, what up, what up? Welcome back to Pnoid News. Man, listen. So somebody the other day stood here and told me, they said, Tom, yo, look, man, we need you to stand here and do your chart thing. Right. And everybody loves a chart thing, so I'm gonna do my chart thing. Credit Suisse. Man, listen, all these guys who, like your financial guys like TK Mao and the old heads in the channel, we all know about Credit Suisse, right? From The Big Short, from Margin Call, from Too Big to Fail, all these movies. Credit Suisse was a big part of the 2008 financial collapse, and at the moment they're down 25% because Saudi Arabia sat here and said that they're not going to invest in it anymore, right? Because they have a 10% share of this bank, so they basically own Credit Suisse. Now, what the hell is going on with Credit Suisse and why is it falling down? Well, let's get into this, right? Let's talk about the micro, then we'll break down to the macro. Okay, we're going to go from Credit Suisse itself, and then we're going to go to the bigger picture. So just stick with me. Don't worry. There's some really cool charts coming up that I found, right? Because I spent the past like hour and a half just, a million tabs open in the browser. So let's check this out. Okay, so Credit Suisse is the 45th largest bank in the world, right? Here's the top 23, right? So China, right? JP Morgan, Mitsubishi, Bank of America, HSBC, some Italian banks, right? Citigroup, Japan First, Postal Savings Bank of China, right? And their Japanese bank, America's Wells Fargo, Barclays. Again, too big to fail, man. Everybody remember all these same banks, right? Anyway, so Deutsche Bank's at 22. So this is the 45th largest bank in the world, right? Its entire assets are about $829 billion. Okay, so I'm going to give you a little background, right? Okay, so last year during 2022 in the fall, right? Actually, like they went through a whole bunch of scandals throughout the past like 2 or 3 years. I'm gonna take you through some of them. Greensill Capital, British financing services company focused on supply chain and accounts receiving financing. It originated loans, securitized them, and sold them to investors. Credit Suisse had 10 billion invested in the company's products. In March 2021, Greensill Capital failed, causing Credit Suisse's clients to lose as much as $3 billion on their investments. Archeos Capital, the private company, primarily managed the assets of Bill Wang, an American trader and investor. Credit Suisse provided brokerage services to the Archegos Capital, including lending. Archegos Capital reportedly experienced losses as much as $20 billion in just a few days. Credit Suisse lost $4.7 billion. Drug-related money laundering. This is bravo, man. Legit. Like, yo, other than HSBC, there's not many times you actually like get a bank literally convicted of money laundering. Um, Okay, so in February 2022, Credit Suisse was charged of being involved in money laundering by a Bulgarian cocaine trafficking ring. It was the first criminal trial of a major bank to occur in Switzerland. In June, the bank was found guilty, fined 1.7 million euros in order to pay 15 million euros to the Swiss government. Credit Suisse announced plans to appeal. Yeah, listen, bro, like y'all are money laundering. Ukraine invasion. Following the Russian invasion of Ukraine, Switzerland placed sanctions on Russia in response. Credit Suisse requested hedge funds and other investors destroy documents that linked Russian oligarchs to things like loans. This led to probes into the bank's compliance with sanction requirements. So those are just some capital, or just some little things. They're a venture capital bank that's really bad at venture capital. That's kind of what's going on. Okay, so that's the micro. All right, let's get out to the macro about what's going on with this bank. All right. Why do I have mortgage rates here? Because I'll be honest with you, there's no charts on how much it costs to start a business loan historically. It just doesn't have the rates for it. So we're going to go with this, right? Okay. So as you can see from this chart from 2021 till now, right? And it's up until 2022. Like, man, listen, it's not a lot of data on 2023 because it's only March. So I'm going to give you what I can. Okay. This goes back to '05 and up until 2022. Basically, the cost of borrowing money was really low for a while. And when the cost of money goes up, people take out less loans. I mean, just some basic stuff. Okay. Fed's fund rate. All right. I know this seems like a chart that shows like, oh my God, it's going down all like crazy, right? Let's look at the last of this, right? Okay. So 2010 up until, today, which this brings us up to about the end of 2022, because again, the St. Louis Fed, which is, I'll be honest with you, the best place to get numbers for a lot of stuff. They're still kind of like 3 or 4 months behind of where we are, which is why like the government tends to be behind where, like the business cycle is. But in all basic understandings from like 2012, 2010 till now, the cost of banks borrowing money was nothing. All right. It costed zero, which is why we've had a massive explosion in tech and fracking and all this technology stuff as a whole, because banks can borrow for nothing. And when you can borrow for nothing, you're able to invest in, like small businesses that aren't going to make any money. And, this will, like stand here and just run stuff crazy up into the air, right? And now that like the cost to borrow money has gone up, banks are no longer just able to throw money at everything. So credit tightens up, right? Which ends up causing, like a cascading effect of businesses failing because they can't just, like roll over their loans and expect, oh man, we're going to pay 1%. Now you're going to pay 7%. They're going to go, oh shit, this business model doesn't work because we're not making money at 7%. We can't really justify that, right? That's where we are right now. Okay. Treasury bond prices. Okay, so 2023 so far, the annual change for like the price of a treasury bond is down 10%. So that means the assets on the books of the banks, right? Because basically, what they use to stand here and borrow against are things like treasury bonds or mortgage bonds, right? And so when the value of those goes down, which the average value of them went down 10% so far this year, or 9.09, we'll call it 10 to make it even, right? You're going to end up having problems maintaining your assets. This is a bit of an issue, but things have been swinging really wildly the past few years. It kind of is what it is. Here's another chart of the treasury bonds. Just over a 3 year period, right? Just hey, listen, man. Y'all wanted charts? I'm gonna give you charts. Okay, so let's talk about small businesses. Right, this is a cool website that I found. I might link it in the description. I don't know. I'm probably gonna be too lazy at this point. Right, I don't really care. Average age of a small business owner, or average age of a small business, right, is 20 plus years is 5%, 16 to 20 years, 3%, 11 to 15 years, 11%, 0 to 5 years is 53%. So, like the vast majority of small businesses are less than 10 years old. Just wanted to, kind of put that out there. Um, Top 12 reasons why startups fail. We're not just talking about tech, we're talking about like everything, right? Whether it's, like you're opening an auto shop, or whether you're opening up, like a place that makes apps, or, like a restaurant. The reasons why they fail: run out of cash, right? Because a lot of times what you're going to end up needing to do is just be able to survive long enough that, your initial, like, I got to buy, whatever equipment, office equipment and all this type of stuff, which is expensive. It's like, bro, like, go price a desk. Desks are dumb expensive, right? Or like go price an oven, go price, like a lawnmower, whatever it is. Stuff's expensive. So like you got to pay like that small stuff off, right? That you have to get for your business just to begin with, right? This, like it ends up causing you to have like a negative cash flow for a little bit until you get that initial investment like paid off, right? And you can start actually like recuperating real profit and things of this nature. Second reason is no market need. Like when you open a business, you think they're like, man, listen, I'm gonna do what I'm passionate about. It's gonna be so beautiful. If you do what you love, you never work another day in your life. Yeah, we've all heard this retarded shit from boomers, like real shit. Like it's all nonsense. All right, do what you're good at. Like it is what it is. Got outnumbered. Like all of a sudden there's a need for something, and all of a sudden everybody else is like, hey, there's a need for something. Everybody jumps onto it, and then it gets conglomerized, and like the best person buys everybody else out. Flawed business model. Like, yeah, people don't plan out stuff properly. Regulatory challenges. Oh my God, the government. The government's going to take their pound of flesh, and once there's somebody big in there, they're going to, lobby the government to push small people out. Pricing issues, yeah, inflation's a thing. Not the right team, and got to get the right guys together. And it's things that you have to work on. Product mistime, poor product. Man, listen, I'll be honest, I kind of dislike these. This website is pretty cool. All right. And the sectors having the highest failure rates within 1 year: industry, including mining, geological engineers, first line supervisors, administrative and waste services have a 21% failure rate. Information businesses, such as customer service representatives, telecommunications equipment installers, 21% failure rate. Art and recreation businesses witness a 19% failure rate. Top five declining sectors: health and welfare funds, negative 35%; iron and steel manufacturing, negative 21%; scrap metal recycling, prefabricated home manufacturing, and real estate appraisal. Right? Oh man, listen, still got a whole bunch of stuff to go through yet. Okay, let's get to the other macro. Baby boomers! Right, yo, man, listen, the boomers are always motherfucking the cause of everything. Okay, so let's talk about this. Right, silent generation, baby boomers, Gen X, millennials. Okay, wealth 2019. So there's more millennials than there are baby boomers, right? Not by a lot, but a little bit, right? The baby boomers have $59.4 trillion in wealth, all right? Their average wealth per person is $834,000, right? Millennials, we're going to get Gen X, has 28.6, average wealth 440,000. Millennials, right? It's everybody up to 42 years old, 25 to 42, have 5 trillion in wealth, average wealth of $68,000 per person. Boomers are all retiring, right? And they're taking all that wealth, right, and putting it into like low yield stuff that's going to get you like 2 or 3% per year. They'll invest in like the SPY or something. They'll invest in uh, Walmart's, or like GE, things that are blue chip. Lockheed Martin, things that are never going to go under. You know what I'm saying? Like a good little, nice little fund that'll just get you 3 or 4% a year on your, like on your $830,000 retirement fund, right? At the end of the day, that way you can stay retired a little while. Okay, but with that, all that cheap capital that was out here helping the tech grow and helping all this stuff like explode disappears, right? And as baby boomers stand here and get older, and as they, continue to draw down on these funds, they're all going to stand here and, like end up like fucking everything up in the long term, because like, we're not making any money as millennials. Gen X doesn't have the money to be able to, like, again, baby boomers have twice the money that Gen X does. And the millennials, have none, right? We don't have any money, so there's nothing we can really do. Labor rate. This is a cool one. I was talking about this on Discord the other night, right? We're having a conversation talking about like the amount of people who are just in general not like working, right? As in general, like you're just like, they're getting out of the labor force. So, and I don't think like this chart really shows what the situation is. Okay, so this is men from 16 to 75. Okay, and it has the percentages of people who are working, right? And the top like percentage of things, like 74.4% of people were working. This is 2001 to 2020. Okay, 2021 to 2022. At 2022, I'm pretty sure, right? This is from Bureau of Labor Statistics, right? In 2001, 74% of all men working. 2022, it's 70%. So we're down like 4.5%, right? So, and then if you look at the age ranges, like 25 to 54 went from 91 to 88. 25 to 34 went from 92 to 87. Actually, yeah, 81 to 73, 92 to 87, 88 to 86, right, for 45 to 54, 92 to 89, 55 and older, 40 to 44, right? So there's an uptick in people who are 55 and older working. Just like 55 to 64 and 65 to 74 went from 24 to 30. So older generations are working longer, but the younger generations are kind of signing out, right? Okay. Here's, like one of the, is for all the millennials and all of us, who are our age, right? See the decline in like, like what's going on in the labor rate and men and stuff. Okay. White men went from 67% to 59%, 75 to 65, right? Or 75% to 65%. So it's a 10% drop in white men working, right? That's kind of crazy. Okay. 4 in 10 boomers are still financially supporting their adult children. That's a bit of a problem, right? In the end of the day. So, macro, retiring workforce or retiring group of people with all the money, right? Smaller generations underneath, especially in places like Europe, China, Japan, Korea, all over the place. I didn't grab those charts. I probably should have. The birth rate is dropping like a stone. Like there's new record lows in place. Korea just hit 0.65 kids per woman, right? It's getting ridiculous. Like they're literally not breeding at all, right? So there's nobody having children around the world to replace this next generation, which means that like the entire economic model of capitalism, which means infinite growth, like you have to have like in capitalism, the base premise of capitalism is that you have you're able to have property rights and therefore like you're able to get investment in order to start something and you own what it is that you create, therefore you're able to sell it and you're able to like stand here and sell it into it like an enlarging market and be able to have future investments and growth so that you can keep getting larger and making more capital. Problem is though is when you don't have that future generation to invest, consume, like support, work at, any of these things. None of this works anymore. All of it collapses. So, end of capitalism because end of birth rate, where we are right now. Ernest Hemingway said, the way you go bankrupt is a little bit at a time and then all at once. It's what we're doing. A little at a time right now, and then it'll all just coming collapsing at one time. It's going to be a hard, landing. But little by little, we're going to get there. It's Tom Pease with Pnoid News. I hope y'all enjoy this. Like, share, and subscribe. I'm out.